Among the many problems faced by newbie Forex traders or possibly the intermediate ones who have been in Forex game for a while now is their inability to interpret what the chart they are looking at is saying. They cannot tell you basically what is happening to the pairs and why the pairs are reacting the way they are reacting. So in today's class, I'd like to teach you some secrets and tricks on how to interpret a particular pair by mere looking at the chart. And what we'll be considering today is the base currency and the quote currency. Now, if you're familiar with the game of Forex, all right, you would know that for those people that trade the currency pair, it is called a currency pair because it has to do with the interaction between two currencies. All right, and the most popular one out there is the Euro USD, is the Euro USD pair. That's one of the most popular pair out there. And we shall be considering how to just look at this charts and interpret basically what they are saying, right? So what you need to understand in interpreting charts is we have two currencies, all right? And the first currency that starts the naming is called the base currency. Like when you see the Euro US dollar, the first currency, which is euro, is called the base currency. And the next currency, which is the US dollar, is called the quotes currency. Are we together? So the base currency is the first currency that starts the name, and the base currency is the last currency that ends the name. All right. So for Euro USD pair, the base currency is euro, while the quote currency is dollar. So what is the base currency? The base currency is the first currency in the currency pair. It is the currency being bought or sold. All right? The base currency is the currency being bought or sold. So for example, if you have the Euro USD, the base currency is the euro, the quote currency is the US dollar. The base currency value is relative to the quote currency. Exchange rate indicates the number of quote currencies units required to purchase 1 unit of base currency. So what it means is when you're looking at the Euro USD pair, the main currency you're buying or selling is the euro against the US dollar, right? So the US dollar is trying to tell you that, okay, I need 5 US dollar to buy 1 euros, or I need 2 US dollars to buy 1 euro. So that's basically what the explanation is trying to tell us. How many units of the quote currency do you need to get 1 unit of the base currency? Are we together? So that's basically what this means. And that means if the base currency, all right, if the base currency is stronger than the quote currency, it means when you look at your charts, you would have what? An uptrend. So anytime you look at your charts and it looks like this, it looks like you're forming higher high and higher lows and all that, it means your base currency is stronger than your quote currency. But in an instance where the quote currency becomes stronger than the base currency, you would have this, you would have this, you would have a downtrend to contend with, all right? So basically that's what it means. When you have So when you have this, I'm having an obvious downtrend. Why? Because my quote currency is what? Bigger than my base or stronger than my base currency. So now what is a quote currency? A quote currency, also known as a counter currency, is the second currency in the currency pair. It's the currency used to quote the price of the base currency. So as I explained, the quote currency shows how much of it is needed to buy 1 unit of the base currency. That's what we just explained earlier. The base currency is going to tell you the quote currency is going to tell you how much of it you need to buy 1 unit of the base currency. So for the same example, the Euro USD pair, The US dollar is the quote currency, while the base currency is euros. And as I explained, if the quote currency is stronger than the base currency, all right, based on the exchange rates, we're going to have what? A downtrend. We're going to have a downtrend. So anytime you see a downtrend on your chart, you should just quickly understand that the quote currency is now becoming stronger than the base currency. And what influences this rate, what influences this amount? It is based on government activities, all right? Based on government activities, based on financial institution activities, on how these two currencies transact, based off of their different countries that these currencies are being used and all that. What is their affiliation between the two currencies? How do they transact? What relationships do they have? Those are the things that will influence the prices you see on your charts. But anytime you just look at your chart and understands that the graph is moving up, then you should know my base currency is stronger. Then it will give you an idea and an overview of what to do next in the market. So basically, this is a simple breakdown on how to interpret a chart anytime you look at it as a Forex trader. And that is very important because you cannot be a Forex trader and don't know how to interpret charts.